Just a moment while I start. All right. Let's get that thing out of the way. Good morning, everybody. Happy Monday. So as we usually do, we want to start with market events. If your market events look like this and you have a lot of things on there, just uncheck show all, choose Econo Day events. We have additional auctions today at 11:30. This is important to recognize. Go look at last Monday at 11:30 and you'll see why. There is no promise or guarantee that there's going to be a market move at 11:30, but you don't want to be caught flat-footed. 11:30 and 12:30 today. The later ones are for Globex trading. Not going to be a big deal for us. Just want to recognize that there is the potential for a catalyst event, a change of market sentiment. And this is just a really messed up day. That's why I named it a bifurcated index. Last night, we were working in the office. I watched the markets open. And throughout the evening last night, I was just completely flummoxed. And I know that I'm not the only one, because the people they were bringing on to Bloomberg were saying the same thing. I just don't get it. Now, imagine, I don't have 30 years as a market technician. So I don't really feel bad when I can't answer the kind of questions that leave me stuck and confused. But when 30 and 40-year veterans, Morgan Stanley analysts, JP Morgan analysts are sitting there scratching their heads saying, I don't get it, and it's not supposed to do that, and well, then I guess I can't feel so bad. We're looking at the S&P on a daily chart. If you trade the futures and you don't go to the daily chart, you are blind and you're missing a lot of things. You want to at least go out there once a day, just take a look around. If you don't see anything, that's fine, but at least you can say you went out there and you looked. Because I promise you, if you never look, you'll never see anything, right? And every once in a while, you may just see something that can save your butt or can offer you a trade opportunity. I'm always focused first on preserving capital and avoiding dangers, but second to that, I'm always looking for an opportunity. So just go out and take a peek. Maybe there's nothing there, maybe not. So what is out there right now? Well, we had that little micro cup. Some people really liked to talk about that head and shoulders within that micro cup, or however you want to say it and however you want to see it. We broke this critical level to the upside, had a nice little fake out. This pattern here, something that I've coined the phrase Busby. You can call it Bob's uncle. I don't care what you call it. Just recognize that old support is supposed to be new resistance and vice versa. So when this was a resistance area and then we broke through it, that was supposed to become a support area. It didn't provide much support. We're at that level today. You can see we're just underneath that level. What are these green and red lines? Well, that is the weekly expected move. On Friday at the close, those lines get drawn, and it is a measurement of volatility and expected move. It's got time in it. It's a square root formula. There's no reason for me to nerd out on you. Just want you to understand that more than 80% of the time, price will close the week inside of one of these boxes. And the really nice thing is you don't have to take my word for it. You can go back and you can look and you can count how many times in the last year have we left the box and closed outside of it versus how many times week after week through the whole year did we stay inside of it. How many times did we close right on one of those lines, which is called pinning. Now, this particular indicator was developed by Mobius due to an action that Don Kaufman does every single week. Every single week, Don Kaufman goes out and he hand draws lines on the SPX. Every weekend he does this. And hand drawing your lines is a little more accurate, but there's 9,000 markets out there. You wouldn't want to go hand draw every single market. So Mobius built this indicator. It is not exactly 100% perfect, but it is a very close approximation of where you need to be. Remember, trillions and trillions of dollars are spent every week on this expected move. Now, the SPX has a higher rate of closing on these lines than any other thing. They call it statistically improbable that something can perform that accurately in the market. Imagine that. Even analysts say that's amazing. It's not supposed to close on the line so many times like that. It's not right. Well, it's because money is being moved and it pins price. So why go down this little rabbit hole? Why have the discussion about this? These expected move lines are a visual gauge for where the algorithms are trading. Why draw next week's lines? Because the institutions are going out there and they are trading strangles, picking one of these two lines. When we break outside of the line just a little bit, it's not a big deal. You can see we broke out of the line just a little bit. But when we break to the upside, the algorithms have to buy more to get their positions delta neutral. So the more we leave to the upside, the more they have to buy. The more they buy, the more we leave higher to the upside. Same thing to the downside. These are a visual gauge for where our risk is in the market. Do the market makers anticipate or expect large amounts of volatility or not? Look at the size of the expected move 2 weeks ago. Take that and put it into last week's and realize that they had expected quite a bit more volatility last week. It's why they made the lines bigger. Look how big they made them this week. I'll just duplicate that box and duplicate it again. We can almost say that the risk is 2.5 times greater than it was 2 weeks ago. That's a lot of risk, guys. And what these lines also mean is that the S&P can go to 47.47 or 43.19, and it wouldn't even be considered unusual. It would just be another week in the market. That would be a normal week at this point. Seeing the S&P go down to $431, right? For those of you who trade SPY. $440 to the downside, $466 to the upside. Imagine seeing SPY fall to 440 and not even thinking that that's unusual. That would just be a yawn in the market. Ho-hum, nothing special. Point is, they are expecting a lot of volatility. There's a lot of unknowns. There's a lot of uncertainty. There's a lot of angst. And the markets are not in sync. We are completely and totally bifurcated. Perfect example of that at the moment, the S&P is down. No, the S&P is up 0.25%. They were almost flat when last time I looked at them, they were down here. So they're up 0.25%. The Nasdaq is still down more than 0.25%. The Dow is up more than half. The Russell is up more than 0.75%. We're all over the place. Now, China changed some economic policy and basically untied the hands of banks over there. And there is now a new $1.66 trillion capital flow, or just capital sitting on the sidelines ready to be put into play. So keep your eye on those bonds today. We're really going to be trying to ask the question, where are they going? Are they going to buy the dollar and get into markets through the equities, or are they going to buy the bonds? They're going to buy something with it, right? They're not going to just stay cash. So keep your eye on those two markets. Let's go ahead and dig a little deeper now into the ES. So we're underneath the VWAP. This indicator that you're seeing on my screen, both of these, I shared them in the large caps room with an explanation. I also shared them in the Thinkorswim Discord over the weekend. They are reading a 60-minute chart for me, even though I'm on a 5-minute chart. All right, so that's why it's saying that we're at support, even though we're way up here, or that we have positive momentum in a downtrend. Sounds odd, doesn't it? We're underneath VWAP. We are higher than where we opened, higher than where we closed on Friday, but not by much. We're basically flat. Now notice, even though I'm saying we're basically flat, Thinkorswim is saying we're up more than 0.25%. It all comes down to what it considers the close and where we consider the opening. There is no good way to do this. There's a 4 o'clock close, a 4:15 close, and a 5 o'clock close, all dealing with the futures. Which one should we use? Makes it very confusing. The easiest way to answer that question is just come out to your daily chart and mark where the daily candle closed. It just solves that problem. 45.33. So from that close, we're up 0.3. If we break to the downside, we're going to resolve that pivot point. Then we will resolve yesterday's low. That really is the low for all of the week last week. So if we manage to get below 4,500, it's game on. Notice how far I just went out to find something to mark. I'm on our chart. From 45, we do happen to have a little bit of a pivot right there. 44.72 and then 44.29. That's it. So if we happen to break this low here, then we're going to be going to 44.72 and then 44, I'll just say 44.25. Right? We can use the quarters, 44.25. An upside break, we will first have to resolve the Globex high. We will then want to manage basically the open of Friday because it just ties in real nice with Thursday's pivot point, and then we will deal with Friday's high. Now there is this little tactic that I had read about a long time ago that discusses a change in market sentiment where you get these pops at the open, that nice little boost and rally before it just spends the rest of the day dumping. And then it repeats that again and it repeats it again. And it's how we transition lower and lower and lower and lower without really freaking everybody out. But it also catches a lot of newer traders by surprise because they're all piling into calls just blindly right at the open. You can see them doing it. You know, you come in and literally watch this thing unfolding right before the open. You can see them bidding in. And they spike it in at the open, and the institutions are just giving it to them. And then it rolls over and dumps. We normally see this in a capital rotation when we're changing through sectors, but we're actually seeing it in the indexes right now too. So don't be caught on that, right? Plus, on Mondays, we've got to absorb all of that information from the weekend. Remember, there's the old theory that price is always right, that price knows everything that there is to know about the thing that you want to trade. The price is never wrong. And all of that may be true, but on the weekends when price wasn't moving and a lot of news was coming out, all of that information needs to be priced into the market Monday morning. And so whether that takes 2 minutes or 2 hours, the first part of the morning on a Monday morning is just that, pricing in all of that news. I don't normally answer questions during this, but I'm going to answer that one. No, I'm not selling this indicator. I don't sell indicators. If I had needed to make money that bad, then I must really be doing a bad thing with my trading, right? No, I'm not selling that indicator. It's on the Discord that I made for Thinkorswim Discord, right? You want the indicator, go over here, the Thinkorswim workbook, right there. Defined analysis. There's the stock version and the futures version. Basically, the only difference is how big the cloud is drawn, because if you don't make a distinction between those, you'll end up with a really big cloud in your equities. And it's a mess. Sell indicators. Bah. All right, Nasdaq, we are below the VWAP. We're going to be looking to deal with yesterday's low, and beyond that, we're going to have to take a deeper perspective. This is a 12-hour chart. The reason I use a 12-hour chart is because Thinkorswim does not do a really good job of showing pre-market activity on a daily chart. Sometimes it will on the futures, but it won't do it in like the equities or something like that. So if you go to a 12-hour, you have a chart that resembles very, very closely what a daily chart will look like, and it will still have your pre-market trading on there. Nice little workaround, I guess, right? So below the low of yesterday, we do got a little bit of a pivot around the 475s. And then 52. There could be a little bit of an argument to be made for the lows of this price shelf, but technically speaking, that isn't going to provide very much. Still, it's better than nothing, I guess. And keep an eye on it. There's just nothing there, guys. If we begin that route, it's going to be one hell of a run. Looking at it from the other point of view, if we can get back above the VWAP, then deal with the Globex high, then we'll deal with price action from yesterday. Man, that indicator is definitely useful, but it is an ugly sucker zooming in and out. Just take that off for a moment. Too darn distracting. All right. Through the Globex high, through the Globex low of yesterday, pivot minor. Now, the Nasdaq is underwater compared to the other markets. The Asian markets and even Japan was down a lot on their tech side. Right, so that's something to keep in mind. Alibaba was one of those. Tencent, I think they mentioned JD. Don't quote me on JD. Definitely Tencent and Alibaba. The EVs got whacked. There was a beautiful rally up off those lows in Bitcoin. If you guys are into that, hopefully you got some of that. I got a large port of that. I just didn't have very much in holdings. So it ran like a mad demon. But, when you have a tiny itty bitty position, then your tiny little itty bitty position doesn't make much money. Whatever. I had fun doing it. So that's our trading day in the futures. Remember, they just released a lot of capital. We want to see where that capital is going. We want to be looking for its input into the market today. By the way, speaking of capital, Evergrande does have 2 payments that are due today. I believe they are dollar-denominated debt that needs to be paid today. So be watching for a bid in the dollar. We had a heck of a turnaround in here earlier. Get a little bit of whiplash on that. The trend has been solid in the bonds all night. Be looking for any sort of reversal here. We're starting to present with a little bit of a failed flag on the dollar. Could be looking for that turnaround. Remember, the dollar opens at 8 o'clock. The bonds open at 8:20. And the VIX, oh boy. So I was kind of going to save this for last, but I don't want to have to come back to this. So guys, we went into backwardation Friday, and that's really geek speak for inversion in the curve of VIX. It's important that we recognize that we're in this backwardation, and I believe we actually came back out of it, but we're going to go over there and look at it anyways. Yeah, we didn't come back out of it. So this is January, and you can see that January is pricing in at around $27.80. Well, here's April and February and March, right? April is at 27.65 and January is at 27.85. It's cheaper in the future than it is right now. This happens when investors and firms are more concerned about their immediate environment than they are things farther down the road. And generally speaking, things farther down the road is where normally risk lies. Hurricanes, earthquakes, wars, flood, who knows what would happen in the future? And that's why the future is normally more expensive. Right now, they are more worried about the present. This inversion messes with the options in a big way. If you're going to day trade options right now, you're very likely at risk of getting volatility crush. Now, normally we know we're going to get a little bit of crush as we buy a call and the market rises. Our call, gets stripped of that volatility and it loses a few points. No problem. We know that happens. But right now, we are at such an extreme level of volatility that if a market does begin to rally really hard off of these lows, the market makers are going to strip the volatility out of these options hard. Look how much volatility there is in SPY right now. It's at a 38, 37, 36 vol. These are the front three contracts that we would normally be trading. All right. And when you buy a call that has a 30 vol or 38 volatility, and through the day it loses 8 points, you're losing an extreme amount of money. So can you make money buying calls in a market like this? Yes, but it is going to be very, very hard to make money doing that. Whereas if you just went ahead and built a spread, you could shunt most of that impact away. You would literally be making the money that you're supposed to make from a trade that you're winning in. So just buy the spread today, guys. For the week, I wouldn't even say for the day, buy the spread. Put one option in the money, put one option out of the money. And if you're looking at this and you're thinking, yeah, but that only has a profit of $50, $40, $45. So what? Buy 10 of them. Nobody says you only have to buy one. But you would make more money buying 10 of these than you would buying one call. The volatility crush that is on deck this week is extreme. And if you try to buy calls this week, naked, singles, or buying puts, you're very likely going to lose more often than you win, even if you get the direction right. Especially if you're trying to do small scalps, little 20-cent moves and 10-cent moves, things like that. It's not going to move enough to make you the money you're looking for. A typical SPY option, when I day trade SPY, I buy a call and SPY moves $1. My call usually makes 25 to 35 cents on the dollar. Now think about that. 25 to 30 cents on the dollar. If SPY moves $5 today, maybe my option makes $1.25, right? It's kind of a ballpark number. A $5 move in SPY is a pretty significant move. Today, that option would not make even that much. This week. So something to think about, right? which is why I say if you're going to day trade, why not day trade something that was designed to be day traded rather than options which were never, ever designed to be day traded? We do it and it works, but we're severely handicapped trying to day trade options, and there are much, much better things to day trade. You see the airlines are looking good this morning. Not too bad. Some of them got upgrades over the weekend. There was a lot of analyst upgrades over the weekend. Kind of take that with a grain of salt, right? You don't know what their ulterior motive is for putting out that upgrade. You know, did they just get an assignment and was told to go do that? Are they helping out a friend? You know, are they trying to pump and dump something? Because, you know, whether it's a penny stock or not, the same concept of pumping something up just to dump it exists everywhere. So be careful when you're reading the analyst recommendations this morning. Really take a look at the firm doing the upgrade or the downgrade and actually read why they are giving it the upgrade. What makes them believe that it should be upgraded? I like to focus on initiating coverage. That's one that always gets my attention. When a firm goes in and says, you know, we're going to initiate coverage on Wells Fargo for whatever reason. Great. I got a better idea of what's going on. As you can see, Texas Instruments is weak. I was actually pricing an iron condor this morning, and I think I'm going to be looking at Texas Instruments for that. Fits right into the chip sector. TXN right there. So you can see the chips are down. Airlines are up. Crypto. Now, my crypto list is not a list of crypto currencies. It is companies connected to the blockchain sphere. All down. One random green one in all of that. The EV market. Man, there's been some movers in this one this morning, including LCID, which is down more than 13.5%. Listening to the Asian markets last night, Citi was a name that kept coming up. Keep your eye on the financials. Remember that when the dollar and the bonds get to rocking and rolling, it's the financials that are most immediately and impacted by that, right? So you want to always start with those on a day where you really expect the bonds and the dollar to shake the tree. It always comes down to technology and finance. Well, tech most certainly got kicked in the face over the weekend and through the overnight hours around the world. So for a nice rebound play, I'd be looking at tech. For a fade off at the open, that little pop rally dump that we were talking about earlier, I'd be looking at finance. S&P 500, pre-market change. Use the filter, knock it down because we don't need to look at 500 names. I try to get that around 100, but due to the change in market cap in the last 2 weeks, there's almost an impossible way of getting that to 100, and I don't even struggle with it anymore. 117 or 87 is basically your pick. I'll use 117. We just want to change the color scheme. Notice how a lot of these are gray, even though they're positive, you know, more than 1/4% or down more than 1/4%. So to change the color scheme to respond more to these lower numbers, we want to go up here where it says 1x and just adjust that a little bit. Now, if it's closer to flat, it's gray. But if it's moved off of the flatness, even just slightly, like Nike's, just more than a dime, and it has a color change. So you can see we got a mixed bag of goods. Retail's not looking that bad other than Amazon, which is surprising because right now Amazon and, United Parcel Service and FedEx are just duking it out over shipping. You kind of figure we'd see something on Amazon, but Nvidia kicked in the face. Definitely going to be watching for Nvidia today, one of the FANG names. Speaking of FANG names, Tesla also down more than 2%. When we talk about reversal markets, we know that Tesla's got legs. This thing can move. Tesla, Amazon, Nvidia, Google, all of these make significant runs when they decide to turn and go. So I'm going to be looking at these through the day, setting alerts and getting prepared for just, an opportunity should it present itself. S&P 100, you can see we don't have very many names in the red. But for the names that are in the green, a lot of these are not up by very much. And if they're not up at least 0.5%, then we just kind of shrug and we don't really give it much credence, right? So you really have to kind of expand beyond that, just seeing green and ask, well, how many are up at least 0.5% this morning? And where are they in a particular sector, industry, sub-industry, and follow them down the rabbit hole. Set this one to the Nasdaq 100. Pre-market change. Give a little bit of a color adjustment. You can see why the Nasdaq is down and the other indexes are not. It's across the board. There are a few names up, but they're more of the exception than the rule. Chip names are just getting whacked. Some Asian names in there. China Tech. For the ones that are positive, kind of flip it and run down the other direction. Netflix, Apple, there's a couple of good ones in here. Some retail. And our old buddy Costco is still running like a mad demon. All right. This is the screener spot where we get to answer the question, how many names are up in the index? This is the S&P 100. We're looking at change of at least 0.5%. 30% of the S&P is up 0.5% this morning. That's not too bad. That's feeling pretty good from, a market breadth perspective. The Nasdaq, 10%. 10% of the Nasdaq is up at least 0.5%. Be very careful out there, guys. I was looking through the watch lists over the weekend for some swing ideas, and there's just nothing that I would want to swing for, a significant period of time. Not even, the 6 week to 8 week swings that we would normally be doing. I mean, I was pricing Texas Instruments for that iron condor, but I really had to bring it in to find a value that I was even willing to entertain. That's basically what I'm looking at. Uh, $20 wide, using $5 width in the strikes, collecting 3 and risking 2 for about 30 days. And there are trade setups out there right now that would encourage us to take the trade. But like IBD talks about, even if you see your setup, if the overall general marketplace is trash, then you want to either A, stand aside, Or B, start your new positions very small and look to gradually build out, because when you're in a trashed market environment, the risk of your patterns failing increases significantly, right? And so we would look at SPY and we would look at the QQQ and just ask that overall statement: are we in a market with an uptrend, a market under pressure, or a market in a downtrend? And they use those three metrics to make their determination on how to be opening new positions. So it's not the idea that there are no setups, right? It's the idea that even though we see the setups right now, we're in a marketing correction. So we want to be opening up very small positions, if any, right? And what I've been trading is short duration, using this Friday or next Friday's options, locking in if it's a fixed profit trade, going from 35 to 55% profit and closing that trade down and moving on. So what I got for you guys. Have a good morning. Be careful, be safe, and I will see all of you as I begin the live stream at the Bullish Bears.